Welcome traders, welcome everyone to yet another trading video. I am Michelle, one of your admins at Bavelchi FX, and today I want to show you how to set up your daily high-low indicator, which will help you, filter a lot of false breakouts that occur in the market in the beginning of any trading day. So what is the daily high-low? Daily high-low bars are simply representation of the previous day high and low. So rather than plot them on manually, this nice little channel here, this red and green, helps you to plot them on in a very neat fashion. So now I'm going to show you how to set this up on your charts, but let me show this in real quick. Now, most traders around the world often set pending orders on the high and the low of the previous day. Why? So that upon the opening of the market the next day, these pending orders are triggered. Now, what are pending orders? We have the sell stop, we have the buy stop. So these traders set these pending orders on the high and the low of the previous day, so that upon the opening of the market the next day, these orders are triggered and potentially might or might not put them in profits. Now, the market makers are aware of this, and oftentimes they trigger these pending orders before the real move happens. Let me show you an example real quick. This is the previous day's high right here. You can see this is a false breakout. Let me quickly highlight this for you real quick. This right here is a false breakout, and you can see false breakouts, sharp reversal in the opposite direction, putting them in a loss. For those of them who don't use stop losses and trading stops, this move right here will potentially put them in a huge amount of loss. So what I'm going to show you today is going to help you filter out these false breakouts and help you ride the trend well. And another thing I want to show you is that you use this indicator in line with the overall market bias. You don't want to be buying in a seller's market. You don't want to be selling in a buyer's market. So you use this in line with the overall market bias and market trend. So moving forward, I'm going to show you how to set this up real quick on your charts, and let's do this. Now I want you to note this will be used only on the 2-hour and the 1-hour time frame, in line with the overall market trend or market bias. You don't want to counter the trend. Combining this with other technical factors like your Fibonacci's, your key levels, be it the dailies or the weeklies, your market structure, your higher highs and your higher lows, and so forth. So I want you to take out your notepads, jot this down, or you can rewatch this video as many times as you want, and also to backtest this till you get the hang of it. So let me show you how to set this up real quick. This is mine. It has already been set up, but let me take it off and show you how it's going to look like when you are trying to set it up. So reset settings. Okay, so this is how it's going to look like. Let me take this off real quick. We don't need all of this in the charts. So this is how it's potentially going to look like when you are beginning to set it up. So you click on formats, not this, formats, and you go to style. All these check boxes, you are going to uncheck every single one of them except the previous day's high and the previous day low. So let's begin. Uncheck, 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 uncheck. Let's just uncheck everything. Then I'll show you the ones you should check in your charts. Check. There are so many of them. It's very exhausting. Uncheck, 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 uncheck. Okay. So you want to check the previous daily high, this one here, and the previous daily low. Okay, Now you go to this cross, change it to lines with breaks, and also the previous daily low, you change it to lines with breaks. You can choose any color scheme of your choice, but I personally use the red and the green for, so that I can distinguish them properly. You can decide to use black, like the other admins like Vels and Anderson use black, but I use green and red so that I can, distinguish them from one another. And you move to inputs, which is right here, and uncheck show today's high, open, high, low, close. You uncheck that and you click show yesterday's high, open, high, low, close, which is this. Okay, and you can see it has plotted itself onto the charts very neatly. You can see. So let me share an example real quick. So this is the GBP USD 2-hour charts, and I'm going to be showing you how to use this on your chart. So what did I say earlier on? I said you should be looking out for breakout of the previous day high, sharp reversals. Breakout the previous day high, sharp reversal. Breakout the previous day high, sharp reversals. Those are the only thing you need to look out for. Let me highlight some breakouts here. We have this, clone this, let me clone this, clone. We have this one here. No matter how small the breakout is, no matter how small, again, you need to be really, really savvy on your candlestick pattern recognitions, your dojis, your spinning tops, your tweezer bottoms, your tweezer tops, your bullish and bearish engulfings, your 3-pin patterns. Those are very, very, important candlestick formations that you need to be looking out on this. And you can see here again, I mean, rewind a little. This is an uptrend. What did I say earlier on? You need to use this in line with the overall market trend, with other technical factors, your Fibonacci's, market structures, the lots. You know them. You should know them by now. So we're looking out for breakout sharp reversals, breakout sharp reversals, breakout sharp reversal. Do not counter trend. Trade in line with the market bias. Trade in line with the trend. So other breakouts we have here are, we have this and this. Like I said, no matter how small the breakout is, it's still valid. And now what do we have here? We have a 3-pin pattern. Let me take this box off real quick. We have a 3-pin pattern here carving out the bottom. Now what do you see here? Even from checking the boxes, you can see that the market is an option, making higher highs, making lower highs, all of that. So in line with the trend, you've highlighted this is a low. Let me mark this up. Let me mark this up for you real quick. So this is a low. Once you've established your market bias, you are only to look for buy setups on this currency pair. So let me take my Fibonacci's from here. So here. This is a big picture of Fibonacci, but let me draw the small or the immediate Fibonacci levels for you. So you can see A, B, C, D. A, you even have a small ABCD pattern here. We have A, B, C, D. So let me show you the current ABCD move that happened here in line with the trend. We have A, B, and C. So this is the ABCD pattern that happened on this currency pair, expecting a buy setup. You know, we draw our Fibonacci. We use our Fibonacci tool, swing low to swing high. What do you see? This is my key level, 1, 2, 1, 2, 1, 6. So what can you see? And let me take this box off real quickly. Box us. So what can you see here? Rejection from 0.50 Fibonacci level, a key level, and a previous day high, a previous day's low rather. And what kind of see pattern do you see here? It's a 3-pin pattern, carving at the bottom nicely. And market took off, hitting our first take profit, which is minus 27, and the second take profit to the T, to show you the accuracy of this indicator, or what this indicator can actually do for you. You can see the potential pip that we have on this is about, let me draw this on real quick, 600. We have 160 pips on this move that just happened right now. So you can see how the daily high low has helped filter the overall market trend, and has helped you to make a very precise entry. If you want to be you want to be conservative, you can use a counter trend line, draw 2 points, and breakouts, poof, markets, move 160 pips on this move. So the daily high low is a very, very important tool, and we use it for about 2 years now, and it has really helped us to curb and filter a lot of bad trading setups, a lot of false breakouts, and all of that. So that's just basically the gist of daily high low indicator. So what did I say? Sharp, breakouts, sharp reversals, breakout of the previous day high, and breakout of the previous day low, sharp reversals in line with the market trend. The first thing you have to do is to check the trend direction. What trend are we on? Are we in a bullish trend? Are we in a bearish trend? When you have established that, you apply your daily high low indicator, and use the 2-hour or the 1-hour time frame, and search for potential long or short setup in line with the trend. Also, your candlestick patterns, the other technical factors, your Fibonacci's, your key levels, your daily, weekly, monthly key levels will help you to make very precise entries on the chart. So, watch this video as many times as you can. Backtest this in your spare time. This is the weekend. You can backtest this video. You can backtest this strategy, on your own. If you need any help, the admins are here to help you out with whatever your problem might be. So thank you for watching. Have a lovely weekend. Cheers. And sorry, and another thing, to save this, you can actually save this as a study template, so that in case you want to take them off or delete them, you can actually save them as a study template, a save indicator template. As you can name it whatever you want: daily high low, daily high low, anything you want to name. You can even name it your nickname or whatever. Mine was daily high low. That was it. So you can rename it whatever you want and save. It's going to come up. It should come up on this. So that's it. You can save as a study template so that if you delete it from the charts, you can actually come here and just click on it, and it's going to come out again. So you can see it has come out again. So that's it, guys, for the video. Have a lovely weekend. Be safe and God bless.